And in continuing with our coverage of our 9th anniversary, we have a very special guest in our studios. Manish Chokhani, Director, Enam Holdings, is in the house and in our studios this morning. Manish, it's great to have you on the show. Thanks very much for taking out the time.
Thanks for having me on a special day.
And 9 years, you've
Many
been
congrats.
very... Thank you. You've been supportive, very supportive of our journey over the last 9 years.
And I just realized you guys missed the 2008 crisis, so...
Yeah,
we were busy. We were busy setting up.
Actually,
we wanted to miss the bad and start off when the good began.
No, but it's been 9 years, and you've been part of the journey with us. How have you seen the brand grow? I mean, given that your relationship also
you're doing fantastic, no doubt about it. And you've got me here early this morning.
Yeah, and you've taken time to be in our studios. That's
always happy to be here, and it's good to see your new setup.
Because
I know the unfortunate incident.
Yeah, it's been an eventful start of the year for us.
Head office soon.
Yeah, we're wishing for that as well.
So, I mean, it's been an eventful last 1 year, like Ajay as well was highlighting. Just so much has changed, be it crude, be it currency, the market texture. I mean, gone are the heydays of 2017 when you bought a mid and small cap and you could just sit
back.
Just put your feet up and, just enjoy the ride. What are we staring at for the year ahead? And given that it's going to be an election year and all that, drama is going to play out.
So I'm sure a lot of guests would have come and told you that what were tailwinds last year in terms of falling interest rates, low oil prices, the government sweeping the UP elections, everything looked like rosy for India. And that's the stuff on which bull markets are built. And this year, naturally, everything's turned around. Rates are going up. Oil is, fairly strong. The electoral cycle looks uncertain. So this is a holding period for the markets, I would imagine. And if I've seen markets over whatever, I don't want to say number of years I've been around.
We have your earlier months, Manish. We can fairly guesstimate, sorry.
Yeah. So we tend to bottom in complete despair at around a 12 times multiple. And we tend to be very toppy around a 20 time multiple. The reality is we are closer to that 20x than the 12x. If I look at Nifty a year forward, it's probably about 525 rupees of earnings, which is a 10,500 sort of band for the top end of the index for now. If you project it a year ahead, then it's probably 625, so it takes you to 12.5, 13,000 sort of number. But for that, you need conditions to turn around on elections, on oil, on interest rates and so on, and which will also happen. And all the things we're discussing now are in a way in the price, because the electoral uncertainty, the oil price, the interest rates. So it's a bit like the old India story where you say you consistently disappoint the optimists and you consistently disappoint the pessimists. And we're sort of bang in the middle of that. And like your colleague rightly pointed out, even last year, it was very divergent performance in sectors and stocks. So I don't think it's really a market call that people should be focused on now. It's more to do with individual stocks and what things are happening there.
No, but if we talk about the larger theme that you've highlighted for today's discussion, which is India undergoing a generational shift, and that whole demographic dividend playing out. In fact, isn't it really the demographic dividend which has driven the consumption theme to its best levels, since we've seen, in comparison to the past? Because these companies continue to be very expensive. They continue to deliver growth, and that's the key theme that everybody bets on when it comes to the India story.
But then if you think of India, it's not one sort of composite whole. And I love to think of India in terms of 3 countries. And there's a 2% of India, about 30 million people, which is like Australia. And we have a per capita equal to that of the Australians. And that actually is about a third of our GDP. You take the next slice, and that's like Philippines, which may be the next 18 or 20% of India. And that takes the next third. And 80% of India is really like what unfortunately we call sub-Saharan Africa. And they take the last third.
That's a great analogy.
And the thesis for everyone in India has been that as you move up the income J curve, the people who are in the 2% who are buying cars, the next 18 are buying motorcycles, and the next 80 are buying bicycles. And everyone trades up and comes up that value chain, as it were. So if you think of people buying refrigerator stocks, for example, or air conditioner stocks at 30, 40 multiples, you would think they're crazy. But the fact is, if you're selling fewer air conditioners or fewer ACs than two-wheelers in this country, it gives you can look at it as half glass empty, that this country has no consumption, or you can look at it as half glass, I said it the other way around, you can look at it half glass empty, that consumption lies ahead in this country, and therefore I could give a higher multiple for it. And it's reflected in the market indices as well. When you sit back and look dispassionately, what's the market signaling? 8 companies are 25% of India's market cap. in those 8 companies, there are 5 consumption stocks. Because if I'm buying a home, there's HDFC in there. If I'm getting a retail loan, there's HDFC Bank in there. ITC and Hindustan Lever have always been there in some sense. Maruti is now in there. And one could even make the case, with some degree of skepticism that Reliance, which is now the big telecom and data play, in some sense is a quasi
consumption.
It's hard to make the case because the profits are still, petrochemical, but it's really representative of that the largest company also wants to make a bet in that direction.
But is that the market texture going to be, Manish? The good becomes better and the bad remains poor?
I think it's becoming a bit like that because as the country also formalizes and you get everyone into this GST chain, so a lot of sectors which were hitherto suffering from unorganized sector competition, they seem to now start being beneficiaries of this whole transparency in the chain. And even the SMEs who are staying outside the sort of taxation chain, they realize as they are coming in and their systems and their sales and their purchases all become transparent to the banking system, there's availability of credit to them as well, and which is a big game changer for someone who was borrowing at 5-6% higher. If they can start getting loans which are that much cheaper, that's an incentive to come in, as opposed to saying I could save that much on tax. So when you kind of balance that, it starts giving you a growth impetus over there as well. But you're right. I mean, industry after industry is consolidating. If I look at cement, 3, 4, 5 people, will control large chunks of capacities happening in steel. So, but you're right. That theme is going to continue.
So you're saying that Sub-Saharan is not going to become Philippines anytime soon?
Well, not in a hurry, and that's of course a bugbear we've spoken for many years. That if India had played its cards right after the 2008 crisis. The fact is the rupee was 40 to the dollar. We are now closer to 68, which is a 70% depreciation.
We are at 68 by the way today.
So, that's 70% depreciation. So if in theory you were earning $100 in 2008, it was whatever 4,000 rupees. Now if you earn the same 4,000 rupees, it's $65 or thereabouts. So if we had done nothing like China and stayed kind of pegged to the US dollar, our country wouldn't have been 2.5 trillion, we'd probably have been 4 trillion or maybe even more. That would have given you purchasing power, which would have given you the growth acceleration. Instead, we are importing oil and we are importing gold and keep depreciating and then keep crying about inflation. So I'm not an economist, but that's my 2 bits on that.
Yeah. No, I also want to understand, the path ahead as you see it, and you're calling for the Ds of disruption in digitization, deceptiveness, dematerialization, demonetization, and democratization. Now disruption is a word, I think, which is used and abused. Right? How do you look at opportunities within all of the concepts that you've outlined?
So, well, this really came out of Singularity, and I'd done a show for you guys last year as well. That industry after industry is going to be disrupted, and there's no 2 ways about it. And as you get disrupted by these new technologies which are coming, they tend to be deflationary and they make prices go down, ultimately making it cheaper for everyone.
But they come at the cost of profitability.
So it depends what you do, because the whole industry can be overturned. And let's take the easiest example people think about is, for example, electric vehicles. It may be 10 years away, it may be 8 years away or whatever. But in an Indian context, it stops us from importing oil for transportation fuel. It changes a lot of our current account, it changes a lot of the fiscal deficit. It may make cars ultimately cheaper for people. You can put a solar panel on your home. I mean, forget about Bombay and others, but most Indian towns and villages would have a ground plus 1 structure and you can put a solar roof. And that then takes care of your electricity needs as well as your transportation needs, and it could be transformational over there. Similarly, you look at pharmaceuticals and healthcare, which is a high cost in this country. And as you go away from being people who get bombarded by antibiotics or chemotherapy and they're really blasting the whole area, and you can start going to gene therapies which are very targeted at the specific DNA. It makes it that much less sort of painful as well as hopefully cheaper, because the cost of the genome is falling faster than the cost of the computer chip or the solar panel. So a lot of this is going to change.
So disruption in healthcare medicine is what you
across
feel
the board. I think right across the board. So if you go to manufacturing, you see 3D printing, you see robotics. In IT, we've discussed the use of AI and all of that. So
drones delivering
pizzas. The sad thing is India may miss a lot of this, like we missed the Industrial Revolution. While we make a lot of noises about AI and a lot of government missions and companies, And again, while I respect all our IT companies and the fact they're doing these big buybacks, they've completely missed the big IT revolution. 15 years ago, there was no Alibaba or Tencent or Facebook. And we guys were sitting top of the heap, and we looked across at China with a degree of disdain that they don't have technology and they're really a robotic army of workers. And look where they are today.
So then how do you size the opportunity there? If India's missed these, India's kind of not acknowledged the existence of these big themes which are present globally.
No, I won't say they're not acknowledged. I don't think we are playing to our strengths. Like if for instance, a TCS or a Infosys, which is paying out $2-3 billion, would have used some of that money in developing some of these areas, playing at the edge. Maybe as shareholders, people would have freaked out, but it would have given longevity to the companies. Because now you, in a way, diminish the size of your balance sheet, your ability to play, in that market. And conversely, while people would blame a Reliance for going away from the core of petrochemicals and oil to telecom, the fact is there may be a renewal in a company like
so
that.
So you're basically what you're trying to say is that you would give a lot of credit, even if it comes at the cost of profitability, for a business that's taking up risks and
I think you
trying
have
to
no
be
choice.
disruptive.
If you have to be entrepreneurial as a company and to have longevity, you can't just keep sitting on your laurels.
Yeah.
If even you look across at the US, General Electric, which has been the largest Dow component for the largest number of years, they've had to reinvent. First, they really became a GE finance company, and then it, of course, was shed at the time of the crisis. And they've now tried to position themselves as an Internet of Things company, where you'll put a sensor in every machine, and therefore you remotely know how the machine is performing and so on. So companies have no choice; they will have to morph. And I won't say that corporate India is not aware of it. You would go again. A small example is JSW Energy, thinking about doing electric vehicles as opposed to saying let's just remain, a power producer. It may be a bet which works, it may be a bet which doesn't work, but at least they're thinking of, making that shift.
Moving ahead. Yeah. Okay, which you also are. Tell us more about Living Guard, because that really seems to be, one of the big innovations.
So, one theme I have for myself and everyone we speak about is that the golden era, in a sense, of stock investing, which started with the fall of the Berlin Wall, when the world became one and money flew seamlessly across, seems to be unwinding post the great reset
Newer
of 2008.
walls are being created.
And you see the way Trump is unleashing his trade wars and the way the Chinese are going to behave and so on. The fact is, you can't be taking that sort of full-size bet only as an investor, because a lot of these flows are now disruptive as well. Also in markets, you see this whole phenomena of what I call price agnostic funds, the ETFs which are coming in. And when we scratch our heads about who's buying these stocks at 40, 50, 60 multiples, it's often traced back to the ETFs, where monies just come in and they're getting deployed and they don't really care about the price because no one knows who's behind it. So in that scenario, I would think it's incumbent on people who, it's easy for me to come and say people should be entrepreneurial. What about we guys doing it ourselves as well? And we have a shining example in our market, our greatest investor, Radhakishan Damani. He's built, a $15-20 billion enterprise today. So it can be done, and if you have the knowledge and the learnings, why not apply it in things which can be very impactful? And this company is therefore, something which is close to my heart. We think we can impact 1 billion or more lives with it. It's a technology which embeds into any substrate currently in textile, where you can kill germs, bacteria, and whatever. And it's the first of its kind in the world. So we use it for water purification, we're using it for feminine hygiene, we're using it for disinfecting wipes, medical, and so on. So it will go across the world, and it's really impactful stuff. So we go top of the market.
Is it going to be listed anytime soon?
Well, it's a company overseas. It's unfortunately not in India, but we will have large impact on the sort of Philippines and African ends of the market here for sure.
Right. No, but feminine hygiene is a very important issue right now, and I think a lot of organizations are taking it up. What about propagating the issue more than where things stand as of now? How getting it into the households?
So it will happen. There are two ends to it. The way we've approached it is we are really a technology company which will be an ingredient brand inside somebody else. So the consumer companies will take this technology, and you will probably see some of it on your shelves, I would hope, over the next 12 months from some of the leading producers in this space, global companies. For the bottom end of the market, unfortunately, the real access can only come through government. And we're working a lot with them to, I don't know if you realize, there are no standards for sanitary napkins in India.
Yeah.
Anyone can produce it. And while it's very popular to see the Padman movie, the
Yeah,
fact
I
is you're
was just
getting a
coming to
lot of
that.
unhygienic stuff coming from there. It's very romantic, but it may be in fact causing more disease than unintended consequences there. So there are standards being built, there are testing going on across the country. We are engaged with a number of state governments as well as the center. We're hopeful something comes out. If not, it's anyway happening in other countries as well.
Okay. Good luck with that, Manish.
Great.
And I'm so glad that you
Great.
could take time out
And
and
many
join us
congratulations.
today
Thank
on
you
our
so much.
special
Thank
day.
you so
Thanks.
Great, all the best.
Thanks.
All right, that's a big market voice, Manish Chokhani, talking about all the themes that are close to his heart, talking about markets and of course his passion with Living Guard, which is a not-for-profit for now organization really looking at water purification as well as feminine hygiene, world's first and only disinfecting textile manufacturer.